Thanks for joining us for the Executive Series. I'm joined by Sonny Bangia, who is the Deputy Portfolio Manager for the Antipodes Global Investment Company. Sonny, it's really good to talk to you.
Thanks, Tom.
Now, Antipodes, with this fund in particular, you've got a global purview, but you're a value investor. And in this sort of environment, tell us about some of the challenges that you face as a value investor.
Sure. Yeah, so value's been a difficult factor over the last few years. We are pragmatic value, and we are...
What do you mean by pragmatic value?
Yeah, look, I mean, we don't buy companies just because they're cheap, waiting for them to re-rate. We're looking for multiple ways to win in each and every one of our ideas. We're very conscious that certain styles and factors will persist for a long time, and we try to look for cheap expressions of them. We've known the internet stocks in the US have been quite hot, and we've found quite interesting opportunities in that space, but in China.
Right, so making a value investing particularly challenging at the moment is the turning of the interest rate cycle, if you like, albeit slowly. That's changing the way that investors are looking at various asset classes and various asset markets. How is that affecting your decision making?
Yeah, look, I think the markets have been quite complacent with a low interest rate environment, given it's been low for so long, and it's driven investors to really hunt for yield wherever they could find it. And in some instances, businesses have been taking on leverage to pay out yield. Yep. We think those businesses are quite vulnerable. We've expressed them on the short side in the portfolio. And as rates go up, the cost of capital will be repriced across the world. And then you are getting you have to find a higher hurdle rate. Yep. For investments around the world. So we just think it's more of a period of more caution. Yep. As rates go up and the headwinds from that start to manifest in the economy. But we're still in the early days of the rates going up.
And it's going to take a long time for that readjustment to play through. That makes it probably a situation that requires more patience.
That's right. We know in Europe there's been quite reluctance to move upward in interest rates, given the political dynamics of Europe. But however, European growth is still quite firm. Europe's growing at about 2% per annum, which is consistent with higher interest rates, and certain parts of the market will do well on the back of that, such as European financials, but other businesses that have relied on debt, particularly in the investment property trusts, they will come under more headwinds.
Indeed. Now, given the fact that you've got such a wide spectrum of companies to choose from, where have you been looking most closely?
Yeah, look, we've been quite interested in what's happening in China. There's been concerns regarding the country's economic prospects. We've been quite positive against that sort of backdrop that the market's taken a view on, and we've looked for structural growth stocks in China that we think can win over a long period of time and are presenting quite attractive entry opportunities for us today. A company at the moment that we quite like is Ping An Insurance. It is China's leading privately run life insurer. Most life insurance companies are SOEs. This is a company that's run by private management. They have a phenomenal lead in the market in terms of life insurance. Chinese life insurance is quite underpenetrated relative to West.
It's still a novel idea, really, isn't it? Insuring yourself in those terms in Chinese society, I suppose.
Yeah, I mean, China's been a very large savings economy, with the household sector having around 22 trillion of household savings. But even with that huge savings pool, it's still inadequate in the event the main income householder was to pass away. There would be a $40 trillion US gap. And the government's very well aware of these acute problems. So they're promoting life insurance in the country.
And when there is a social welfare net per se,
correct.
This is equally important, isn't it?
It's very important. So there's very strong government incentive, regulatory incentive, a very rational competitive market dynamics, and Ping An is a private company with a huge tech advantage. They have an internet user base of about 460 million internet users.
And it's a phenomenal number, isn't it?
A phenomenal number, and only 165 million of them have a policy with Ping An. So there's a huge runway of growth, and we can buy this company today on 10 times earnings. So it's quite attractive given it's growing those earnings at about 15-20% per annum.
Now, we've seen so much attention being paid to the FANG stocks, if you like, in the US, and they have done phenomenally well over the course of recent times. How are you looking at this cohort, given what's happened recently?
Yeah, look, I think the underlying drivers behind these businesses are quite real. The valuations paid for by these, the markets paying for these businesses is quite euphoric. And look, whilst we think some of the trends are quite real and we're very tangible that we're living through today, we're just finding much cheaper opportunities in China behind those same structural trends in search and AI, but behind businesses like Baidu, which we can buy today on 18 times earnings, growing its earnings at least at 15-20%. Versus some of the FANG stocks in the US that are, getting quite expensive and, not too far from, extreme valuation territories reached in the last internet bubble period.
So we've talked about China quite a bit in terms of the macro issues driving these companies, but there's also the issue of trade and politics more broadly that's been putting the yuan under a fair bit of pressure. How do you go about treating that as an issue when you're looking at the proposition?
Yeah, sure. Look, I think the Chinese have been dealing with the excesses in their financial system for the last 2 years. They've been tightening monetary policy quite a bit. They've been cleaning out some of the excesses in that banking system that could have led to a bad debt situation. And from that, we believed that Chinese economic growth was going to slow.
Yep.
Then you had trade issues on top of that.
Yep.
So the RMB weakening has been a very nice release valve. Whenever an economy is starting to slow down, the currency weakening has been quite a support. Given China is still quite a large export economy, that's been quite helpful. But we see today the Chinese authorities much more proactive in their policy measures than back in 2015 when China was facing more larger issues with its financial system and overcapacity.
Like shadow banking, for example.
And shadow banking, yeah. So, look, we think the RMB weakening is just a function of the economy slowing. It's not a disaster. Growth will be quite robust. And we still feel that ultimately the authorities are going to continue on with their bad, shadow banking cleanup. And with trade more specifically, look, I think ultimately the US has a bigger game at play here. 2/3 of the Chinese trade deficit with the US can be explained through two items: retail apparel and consumer electronic goods. Well, unfortunately, with a strong US economy, those two sectors are going to be still quite persistent. But longer term, I think the US wants to deal with China's role in intellectual property. And I think that will be a good thing for the global economy. Are they going to strike a trade deal ahead of midterms? Look, it's hard to say, but I think there's a lot of bad news now in the price of Chinese equities.
Yep.
They've adjusted significantly year to date, and I think that's creating some great opportunities on the long side.
Now, you've also spoken about the short selling aspect of your strategy. How do you apply that?
Yeah, look, we really look for businesses that have multiple ways to lose, like we look for businesses that have multiple ways to win on the long side. And that allows us to then find these particular ideas that will play out as these various ways to lose pan out. We see some of these businesses quite over-leveraged. They're primarily in the US. They've been beneficiaries of lower rates. They've been beneficiaries of the theme behind disruption. One example is a automaker in the US that has masqueraded behind a overhyped disruptor. Ultimately, we just think it's a weak company with an over-leveraged balance sheet in a highly competitive auto market, producing electric vehicles that a lot of other German, Japanese competitors will also produce.
So how long do you give Tesla?
Look, I think it's, in this environment, we know that, shorting can be quite tricky, as there's a tendency to be exuberant for longer.
Yep.
But when the punch bowl is taken away from markets, and we're kind of seeing that happen with higher interest rates in the US, and finally we'll start to see that probably in Europe next year. That some of these weak businesses that have relied on debt markets to grow will start to struggle.
Yep.
And I think equity investors will start getting a lot more impatient in that environment.
Now, Sonny, happily, Antipodes has just announced a maiden dividend. Will option holders be entitled to that?
Yes, they absolutely will be, yes.
Good news. All right. It's been great talking to you. Thanks for your time.
Thanks, Tom.
And thanks for joining us for the Executive Series.